Managing risk in the cryptocurrency market is essential for any investor looking to navigate the highly volatile and unpredictable nature of the market. One of the most important steps in managing risk is understanding your risk tolerance. Risk tolerance is the level of risk that you're comfortable taking on as an investor. It can vary from person to person and it depends on your financial situation and investment goals. Understanding your risk tolerance can help you make more informed investment decisions and avoid taking on too much risk. It's important to note that risk tolerance can change over time. For example, an individual who is just starting to invest may have a lower risk tolerance than someone who has been investing for a longer period of time. Similarly, an individual who is closer to retirement may have a lower risk tolerance than someone who is just starting out their career. Your risk tolerance can also be affected by external factors such as the overall market conditions and personal circumstances. Risk tolerance can be measured in a number of ways. Some investors may use a self-assessment quiz or a questionnaire to determine their risk tolerance. Others may use a combination of financial metrics such as their net worth, income, current debt levels to determine their risk tolerance. Once you have a clear understanding of your risk tolerance, you can use this information to make more informed investment decisions. For example, if you have a high risk tolerance, you may be more comfortable with investing in high risk, high reward opportunities. On the other hand, if you have a low risk tolerance, you may be more comfortable with investing in low risk, low reward opportunities. In short, understanding your risk tolerance is an essential step in managing risk in the cryptocurrency market. By understanding your risk tolerance, you can make more informed investment decisions and avoid taking on too much risk. However, it's important to remember that risk tolerance is just one aspect of risk management, and it should be combined with other risk management strategies to maximize your chances of success in the cryptocurrency market.